Good afternoon, everyone. Welcome you to ABC's, the American Business Council's Economic Updates. Here we'll talk about the 10 macro trends that would shape your 2021, speaking from a business perspective. So briefly, I'll just go through share the agenda. So first an item is the president. The president will give the introduction, and then our special guest, Olusegun Zaccheaus, is an Associate Director, Strategy and Economics at KPMG Advisory Services, who would make the presentation. And then we'll go into the Q&A session, which I'll be moderating. And then we'll have Margaret Lele, the CEO Executive Secretary, who will do the closing remarks. So just for your overview, the housekeeping rules. You can send in your questions during the Q&A, and when sending in your questions, please identify yourself and your organization. If you want to speak during the Q&A, kindly signify by raising your hands. The relevant materials will be shared shortly after the webinar. Thank you. Just give us a sec. The president of the council wants to join in. Hello, everyone. Apologies. So just for those joining in, I'm just going to repeat the housekeeping rules. The president just came in. You can send in during the Q&A. You can send in your questions during the Q&A, and while you're doing that, please identify yourself and organization. If you want to speak during the Q&A as well, kindly signify by raising your hands, and the relevant materials will be made available after the webinar. So I'll be handing over to the president. Okay, I'll be handing over to the president in. Good afternoon, sir. Over to you.
Good afternoon. Good afternoon, everyone. Good afternoon, everybody. I hope you can hear me. Joseph,
can you hear me? We can hear you. Yes, we can hear you.
I'm sorry we're starting this event late due to some technical glitches, which I hope will correct before the next meeting. Good afternoon again. On behalf of American Business Council, I'd like to welcome you to this ABC Economic Update, which is the last economic update of the year. The American Business Council for our quarterly economic updates partner with top global professional services companies and experts to share business insights and business with the business community. We hope that businesses and policymakers take a cue from these experts on the opportunities and keys to unlocking the potentials in Nigeria. Thank you very much. Today's event is being handled by KPMG. I think at this point I'll hand over to Joseph, who's the host, to introduce the key speaker for today. Thank you very much.
Thank you very much, sir. So, Zacchaeus Olusegun of KPMG will be making the presentation. Over to you, Zacchaeus.
All right, thank you very much. I will transfer the presentation to me.
Yes.
All right. Give me a moment. Good afternoon, everyone. It's a privilege to spend some few minutes with you today, sharing with you the perspective for 2021. We all know that 2020 is a year that's gone more or less. We're in November, right? Nevertheless, was also a very challenging year. So we're all focusing on 2021 with all the hope it brings. So what I'm going to be doing today is sharing a few thoughts on the factors that we think will shape 2021. And for us, the broad theme is really around the uncertain recovery that we see in the horizon. To walk you through this presentation, I'm going to be talking about three things. I'll quickly take a review of 2020, and which is really about shocks, and for Nigeria, are more shocks, if I will use the word. Globally, it was a story of COVID-19 shock. Nigeria was COVID-19 and oil price shock, what we in KPMG call the twin shocks. But in the last few weeks, we had a third so to speak, shock, which is the protest that led to close down for a few days. Right, I'll run through that briefly. Then I'll spend some time to discuss the 10 macro trends that will shape 2021. And the objective here is not necessarily to forecast, but to share insights so that as you think about your business, as you think about the plan for 2021, you will take some of these factors into consideration. I will then end up with a conclusion and key takeaways. Essentially, I'm talking about what the outlook for 2021 is like, where are the sectors that have opportunities, and what must you do as a business owner or as a business leader to prepare for 2021. That's how I'm going to walk through the presentation. So I've just talked about my outline. So reflecting on 2020 from a rear view, right, at least from November, as I said earlier on, 2020 is a year of shocks. We were at home for more than 7-8 months, and COVID has done quite a lot of damage, both health-wise and economically across different parts of the world. So nobody has been spared. Plus those that closed down early and those that didn't close down at all, like Sweden, every economy has sort of felt the impact of COVID-19. And businesses have had to respond in different ways, some optimal, some suboptimal, but the rest is, so to speak, history. But I think what's then more important, looking beyond the last few months, is what we're now seeing, right, in terms of the outlook for COVID, which the second wave that is leading to lockdown in different economies, right? And that is a source of concern as we enter into 2021, right? And the implication of that on the economy. Then just moving down, as we also continue to reflect on 2021, 2021 was a year in which the central banks in the world, did unusual things, right? They spent quite a lot of money, if I will use that word, right? They created an eased environment just to be able to mitigate the quantum of recession that is an outcome of the COVID-19 shock. And if you look very closely at the chart right in front of you, you will look at towards the end, you will see the lines, the gap, going up, spiking up, right? So it's a reflection of the intervention of the central banks in the world, let me use that word, right? To try to forestall the impact of COVID-19 shock on the economy. Moving away from the global landscape, coming down to Nigeria, we all know the numbers. I'm not going to spend so much time on it. About -6% fall in economic growth in Q2, right? And we know quite a number of sectors were affected, right? All the major real sectors have been affected, but some of the story you need to put in perspective. Because if you look closely at the numbers, right, and you look at some sectors like manufacturing, wholesale and retail, those sectors have been weak structurally for a while, and you realize that the growth rate in those sectors have either been negative or they've been very, very low, less than 2%, right? So it means even prior to entering the season of COVID-19 shock for Nigeria, we were vulnerable as an economy, right? And that's the story that we have on the next slide, right? If you compare Nigeria to a number of other economies and look at the number of indices, right? You will know that as an economy, we have major weaknesses. And the way you can simply know from this chart that I'm showing on the screen is you look at the number of red spots, right, that we have. When you look at our external financing, ability to do business internationally, right, we have red, right? You look at our policy environment, right? The performance is suboptimal. So broadly, I think what we must have at the back of your mind is that our economy is highly vulnerable, even during this COVID shock season and the oil price shock season, right? It's become a bit more vulnerable, right? And that is what we need to deal with as we reflect on 2021. So moving away from the background, I decided not to spend too much time, talking about what we all know, right? Then, moving to what 2021, brings. But it's important that I start with this quote, right? Funny quote. It says an economist is an expert who will know tomorrow why the things it predicted yesterday didn't happen today, right? That's on a lighter note. To say that we try to anticipate how next year will be, right? But sometimes shocks come, that we don't expect, and it sort of turn all things around. But beyond that, just looking closely, right, at 2021, for us in KPMG, we have identified 10 critical things that will drive the economic development within 2021. But the first point is what's very obvious, is what we call the global pressure point. And this has to do with the development outside Nigeria, what's happening to oil, what will happen to oil price in 2021, what will happen to foreign capital flows, investment into Nigeria in 2021, what will happen within the global political landscape in 2021, what will happen to the geopolitics, right, between China and the US in 2021. This factor is really critical, and the reason why it's critical is that there's quite a lot of dependency that we have as an economy on these external factors, right, in terms of revenue for the government, which all know, more importantly, in terms of FX inflow into the economy, which is even more critical for us that operate our different businesses. Then we talk a bit about fiscal sustainability. I think the question I get asked all the time, that does the federal government have an optimal debt level, or is our debt level, as our debt level reach an unsustainable level, right? It's a critical question. It's a fair question we need to ask and get an answer. But my broad view to issues like this is when unusual times, sometimes the traditional approach to economic management may not cut it, and you need to do things unusually. And we've seen that all over the world. I'll deep dive a bit into that and try to tell us what the outlook of this will be in 2021. And the big elephant in the room is the uncertain FX environment, right? And what we call FX quagmire, right? We'll talk a bit about the drivers and what we'll see happening in 2021, because this will really shape a lot of economic activities. We know a lot of manufacturers, a lot of traders, right, are being hurt by the kind of FX environment that we have. We know foreign investors, right, are being deterred because of the FX policy that we run within the economy. And we see this also play out significantly in 2021 to shape the overall economic outcome. Then I will then move and talk briefly about the stringent policy posture, right? I think this is also a very major point. It's worse, or it's stronger in some sector compared to others. Players in FS, will attest to the reality of the stringent policy environment they're operating in. And we all read in the news the CRR debits they get every now and then, right? They're part of the contribution to what make a policy environment very, very stringent, right? And the question is, how will this pan out in 2021, and how will this impact various businesses? I will also then, after that, walk through the constrained productivity, which is one of the fundamental reasons why the cost of doing business in Nigeria is higher than any of our peer countries, right? And we are making progress on ease of doing business, but it has not fundamentally affected the core areas of our cost of doing business, and which all dovetails down to the issue of productivity, right? It's also a factor that is going to shape 2021 and will determine ability of a lot of players, especially players in manufacturing, to move away from all the losses, right, that they are accruing or they're going to accrue at the end of this year, and to begin to turn into profitability. Then I'll talk about the positive part, which is the accelerating credit penetration. In the past 6 to 9 months, CBN has intervened in the economy with over 3.7 trillion naira value of credit thereabout, right? Which is quite significant, which is almost 30% of the entire credit portfolio from banks, to the economic sectors in Nigeria. So we see a lot of positive in here, at least for the general economy. But down the line, we also see the fear of a credit bubble being created that will then crystallize in 2 years to come. Then we move to cautious private sector investment, and our view around that is that investment that businesses need to drive expansion and growth will be limited because they will be cautious of the economic environment. We'll then talk about the emerging digital economy and the implication for 2021. Then talk about social political pressure, which is really important, and we've seen what that can cause even to businesses or to entire business environment. And lastly, we end on what we think is a bedrock of all this, especially for businesses, the consumer pressure point, and the fact that our consumer has very limited and will have going forward also limited ability to spend, which then affects a lot more businesses, especially those that have direct consumer as their primary customer. So those are the 10 factors I'm going to walk through, and those are 10 factors that will shape 2021. And I'll just start quickly by talking about the global pressure points. And I'm not going to spend too much time on that. The global economy is expected to pick up, albeit mildly in 2021. That's the consensus forecast for IMF for different parts of the world, especially China, supposed to pick up a bit stronger. Where the optimism in 2021 is for the global economy now is the Pfizer vaccine, right, and other possibility of getting a vaccine soon, right? I remember when that vaccine was announced, the global capital markets just went up, very, very strongly. So this is really very important. If this vaccine come to the market and people can have access to it, it will certainly impact the global growth pathway. So what we see for 2021 is that with successful vaccine, the global economic growth, especially in the US, will be faster, than with no successful vaccine, obviously. But generally, recovery is predicted for 2021. Moving away from the broad economic growth and just also trying to understand what are the main factors. The first one is, and I sort of put it in question mark, we won't know till January 10th, but a democratic government, what does that spell for sub-Saharan Africa, right? Does that say increased openness, increased trade, right, within the global economy, which will spill over to African economy, including Nigeria? That is a factor we need to watch out for in 2021. Oil price, that's a major one for us as an oil-dependent economy across multiple fronts, right? IEA has forecasted that oil will be around $48, in average in 2028, and that demand will also increase a bit above supply, right, which is good in 2028. So optimism for oil price in 2021. But the truth is that, look, we have gone away from the era in which oil prices get spiked to 80, 90, $100 per barrel, right? So it's going to remain modest in 2021. That's what the outlook says, right? Capital flows, this is a bit tricky one, and it sort of acted in a disconnected manner from the global economic development. So what had happened is that earlier on in the year, once the shock of the COVID hit, we had a lot of capital outflow from emerging market and developing economy, in which Nigeria is one of, right? But by June, when the investors saw a lot of stability, we saw that capital flow started coming back. Capital outflow started returning back into the economy. So it's a mixed bag for foreign capital flow, especially the foreign portfolio inflow, right? The outlook is also a bit modest, right, over 2021. But for foreign direct investment, right, those investment in equity and in businesses, and we expect this to be measured, a bit more measured than what you have for the foreign portfolio inflow that goes into the equity market and the bond market, right? That's what we see. And from a financial condition perspective, what does that mean? As in the ability to borrow money, interest rates, and within the global economy, we expect for emerging market players, for them to still face a bit more expensive environment, especially within the Eurobonds market. But what we're seeing for African economies, including Nigeria, is that during this crisis, they've not accessed Eurobonds, as you would have expected. They're more or less dependent on multilateral funding, right, to drive the economic growth. Trade, so trade has started improving as the phase one agreement between China and the US got better. And though 2020 is dampened, right, 2021 is expected to be a bit more optimistic, right, to achieve about 8% growth, right, in 2021, which is a general optimism, within the trade landscape globally. So we have a positive outlook for trade. So if you summarize this point, what we're saying is 2021 from an external development perspective would be measured, not think too optimistic, but we don't really expect a downside risk, right, as we enter into 2021. And this spells a lot of great impact for sub-Saharan African and Nigeria economy. I'm not going to spend time on oil price. We budget oil price at 40. Global say between 40 and 48. We'll see how that pan out. But broadly underscoring all this is the pathway for reduction in COVID-19, right? We need to see that if a vaccine comes mainstream, yeah, so we know the global economy will pick up a bit more strongly. But if it does not, we may still need to walk through some difficult times. That's what we see from a global perspective, and this will shape what will happen to Nigeria in 2021. This slide just sort of underscores the point I made earlier on around the foreign capital flows. If you look at Africa and Middle East, you can see the flow fell dramatically between July 2020 to September 2020. So it's been affected, right? And that's why the pathway is not pretty clear in terms of foreign capital flow. And this next slide talks a bit more about oil price. And I know the principle, what determines oil price within the global market is typically the forces of demand and supply. But EIA has forecasted that oil price in 2021, as I said earlier on, will be stable in mid-40s, and they expect demand to outstrip supply by about 5 million barrels per day, right? All these are also subjected to the agreement between OPEC plus Russia, right? Like what we saw in the early part of the year, we're not expecting that when, because of geopolitics, right, there was a breakdown of that, consortium between Russia and the OPEC, and that sort of affected the oil price. And we're hopeful that we don't get a shock like that in 2021. Because if a shock like that also happens, it will have a negative impact on oil price. In summary, oil price measured, as I said earlier on, in 2021. I sort of talked about all this summary. Moving on to the second point, which we all talk a lot about and read in the newspaper, is the question of how sustainable is the Nigerian government, but more importantly, how achievable is the ambitious close to 13 trillion naira expenditure budget that the federal government is pitching for 2021. I think from a broad principle perspective, it is important for every government in a time of recession like this to aim to spend extensively in a way to drive up economic activity. So it's not different. What's happening in Nigeria is not different from what's happening in every other part of the world. So I think we need to, first of all, understand that as we dissect it. Because in the time of crisis, right, a lot of times the only entity, institution that can drive or kickstart the economy is usually the federal government, or the fiscal authority, as we will have it. So the main question we then ask is, how would the debt sustainability, how would the ability of government to be able to meet their debt obligation play out, right? And it's important we also know there's some point this year that for every #1 Nigeria earns as revenue, we spend nothing less than 70 kobo of that to pay our debt obligation. Obviously, the point is that we've gotten the cash flow way ahead. That's another way to sort of look at it. As I said, the budget is very ambitious, right? We want to spend about 13 trillion naira in 2021, which is quite one of the largest we've had. But the other part of it is more than 30 or 40% of that spending is deficit, which means it's money we are going to have to borrow, right, to spend. So it's about 5 trillion, which is quite significant. So two questions we need to ask as we enter into 2021. One is, what's the ability of government to achieve that fiscal deficit, right? To close that fiscal deficit, if I put it that way. How easy, how possible is for them to get the funding and to close that gap? That's one. The second point we need to really think about as we reflect on 2021 is, what is the level of budget execution, even if we get the money, right? Revenue has been projected as about 7 trillion. The question we need to ask ourselves, can we really achieve that revenue even as we see 2021? There were a number of ambitious targets, as government would typically do with their very optimistic approach to budgeting, to project that the economy will grow at 3%, that inflation will be less than 13%, right? These are really ambitious targets, right? And one of the things we think is that those targets may be difficult to realize in 2021. And why do we think so? The first thing you need to look at closely is to look at the assumption that makes up the budget, right? So there's an assumption around benchmark oil price. In 2020, it was 28. In 2021, it's budgeted for $40. That's not bad, but sometimes, because of some of the shock we experienced in the past, it's always good to give a bit more headroom so that it can have flexibility. But don't forget, I said earlier on that the oil price is forecasted to be $48 per barrel average in 2021. So we can say that that's fine. That's fine. That's realistic, right? Then we move to assumption around GDP growth, which is 3%. We think that's pretty ambitious, right? IMF has forecasted expected growth of about 1.7%, right? Also, if then give some of the events that happen in this quarter, right, our ability to jump into recovery in 2021 is, as one economist put it, is impaired, right? And this may then affect, our ability to achieve 3% growth. It's it's really unrealistic, and we'll see how that pan out. The point around oil production is also another challenging one. Given the cutback that OPEC has been instituting on its members, right? We say we will achieve 1.86. It's also a kind of tall order. But if global demand increases as we anticipate, right, we can go close and not be too far away from this, hoping that there are no shocks, from our oil supply facilities down south of Nigeria. The other element is around FX, right? I think government can control that artificially, right? So I won't bother much around that. But we're going to talk about that. But we'll begin to talk about fair valuation of exchange rates, right? And there will be a question of what this, if this is tenable or this will be realistic. The last point is inflation. It's currently at about 14.23% thereabout now. The question with inflation is the challenge that the source is what we call structural. So it's a supply push inflation. It's an inflation that has to do with insecurity, that has to do with the weather, flooding of farmland, right? So it's a structural issue, right? And one of the things CBN has said that, look, our hands are constrained. This inflation is not as a result of demand. It's not as a result of too much M2, which is a representation of money within the economy. It's a structural issue that fiscal authority as the government has to deal with. Some you cannot really control. So these are the assumptions around the fiscal plan. Is it realistic? I've just highlighted the point. No, I'll just answer directly. We will make some progress around it. Yeah, I do believe we will make some good progress around it. But if history is what we can use to judge, what can happen in 2021, especially as it relates to government, our ability to execute budget, right, is also impaired. So the best we've done between 50 to 60%, sometimes 70% execution, like this chart is showing. This is the Q3 budget implementation for 2020, and you will see our achievement is typically 70%, sometimes less than 70% on key indicators like revenue line and in both oil and non-oil revenue lines, right? So this is a challenge, and it's a typical challenge. And as you look at the budget in detail, just what I tell my clients is that just discount that achievement by 70%, by 30% at the minimum, even if we are aggressive, right? And that's what we see play out. And why do we think 2021, from a fiscal perspective, will be difficult, right? The deficit is huge. The fiscal space ability to borrow is constrained, and that was the point I made around amount of our revenue that we're using to service the debt. Non-oil revenue potential will also be limited because it's almost proportional to GDP growth. So if your GDP growth is lower, your economic sector will not perform well, and the ability to pay both direct and indirect taxes will be impaired. Though we also know that government is working hard, to drive economic efficiency, right? Tax collection efficiency, so that they can collect a bit more. The last one is around funding. One of the interesting things that will really help funding is the lowering of the domestic interest rate. So when we pull all this together, government is doing quite a bit, and that's what this slide is showing. A lot of initiative from the Ministry of Finance to drive revenue growth, including some of the initiative in the finance bill 2020. One of the interesting parts is government is considering taking over unclaimed dividend, which is an interesting proposition because that will act as another source of revenue for government, right? But from a fiscal perspective, it's still going to be a very tough environment. It's going to be challenging. I don't see the budget realization being more than 60–65%, right? For the best case scenario. That's my anticipation for that in 2021. Moving away from the fiscal sustainability, right? The other point is on certain effects environment, and we all see this. I'm not going to spend too much time just talking about it, but I'll speak to a few points that as you think about the FX environment, as you look at 2021, there are 4 factors we just need to think about. And those 4 factors will pretty determine what happens. The first question is fair value. Is our exchange rate fairly valued? Do we have the right valuation? Between January and now, right, we've made significant progress, right, in terms of valuation of our FX. And what analysts are saying is that, so we're just about 9 to 10% overvalued, which is good and better than where we were after the recession in 2016, 2017, right? So from an FX perspective, good progress around valuation. Liquidity remains a challenge, right? And we know why that is. So we know the issue around oil price and oil-based FX income. We know the issue around the foreign investor, how they sort of slow down, right? And that will impact our FX investment. The third point is multiplicity. Are we still going to be having multiple exchange rates? The people go to different windows and get a margin that is more than 1%, right? So between BDC, I and he window to parallel market, right? That will be an issue until a decision is made to sort of harmonize or unify the exchange rate. Kudos to CBN. Progress was made from March, when the federal government element, those official rates was moved closer to the market rate. Obviously, that's also a tactical policy step to get more money for the federal government. The last point is access. One of the things CBN has been doing is to manage demand, because that's one tool they can control. We expect this to continue into 2021, and which demand will be managed, on a scientific basis. Is this optimal? The jury is out, right? But will it be sustainable? I think no. So this is what we see from the perspective of FX, right? The problem is not going to go away. Maybe that's the way to state the problem in 2021. We're still going to be dealing with the challenges of access, of people gaining the system, of getting better exchange rates, between competitors, for example. And liquidity will continue to be challenged even in 2021. Moving very quickly, I'll just speak a bit about this, the point around the policy environment. What do we expect to see in 2021? I think if you just take a closer look, and we sort of highlighted some of the critical policy, right, and dimension it from the perspective, what's the principle, what philosophy is driving this policy on one end, then what are the potential impacts? Could some of these policies be transformational for the economy and for the sector in which they are targeted at, or could they be regressive, almost bringing the sector down? And you look at some of the policies that government is throwing in the market. And I think what's more important here is to understand what's the policy posture, what's the government trying to achieve, right? We've seen some policy that are progressive. For example, if PIB happens, it could potentially transform the sector and have impact on the economy. But we've seen some other policies that sort of to give government a bit more control of the sector, right? And we have a few examples there that we can look at. We have some that are neutral, that could potentially be favorable to private sector. It depends on how each company approaches those policies. But beyond that, what's the broad policy outlook for 2021? And the way you sort of gauge that is what will be the policy stance, right, of the government? Then what is the policy objective? What's the policy reaction function? And what's the policy balance, right? I think to take this a bit broadly, it's still going to be a stringent policy environment. It's still going to be an environment in which government or policy institutions want to have a bit more control, right? But we also know that multilateral organizations is also pushing a lot of reform. And we see a lot of that also happening in 2021, especially for you to get the funding. We know the World Bank funding is still sort of stalled right now. So we think that will also happen. And we've seen that play out. We've seen the deregulation happening in the downstream sector, right? So it's going to be a mix, but my outlook will be more towards a more stringent policy environment if we look at it. Then talking about the next factor, which is constrained productivity. Our productivity is relatively low than what we have with our peer countries, and we all know the reason for that. There's huge infrastructure gap, right, across all dimensions of infrastructure, right? And the spending, our capex, which is the government spending on infrastructure, has been reducing, right? There's a huge amount budgeted in 2021, and we're hopeful that some of these things will be made, will be realized. And also to think about some of the innovative ways the federal government is, adopting to fund this, like the Sukuk bond for road infrastructure. But when you put it all together, you compare us to some of our peers, our spending on infrastructure is really, really low. So the question is, are we going to get the mileage to improving our infrastructure to drive productivity? In 2021, we don't see a dramatic change. The best we see is incremental. Honestly, it can't even be incremental because we're not even meeting deficits. If you look at the federal government infrastructure plan, we're not even meeting the deficit of 5 years ago, talk less of achieving what is expected for today. So the government will continue to push to play catch up on the infrastructure end. So I don't also see any dramatic improvement in productivity, but there will be progress, from a government perspective. Credit penetration, I talked about this, and we're making huge progress on this end, and the CBN is doing a lot of work around this. And the interesting thing, though there's a downside to it, right? The interesting thing is that development finance, funding the economy, right, is now a priority for CBN. So it's now a policy tool. So we expect a lot of that happening, in 2021. So credit will more or less be positive for the economy, and it will further increase in 2021. Private sector, I have a very short time, so I'm just going to jump through the slides and wrap up. Private sector activity will be a bit low, right? Because of investment confidence, the investment climate is not yet encouraging, at least broadly, right? But we know some sectors there will be some additional investment, but in major sector, broadly manufacturing, right, investment will really be limited because of the kind of investment climate firms are seeing, within Nigeria. Moving on very quickly, digital, we know this is very, very important, right? And it's sort of making significant impact on the economy. And COVID-19 has also brought the need for every business to sort of adopt digital. We see this playing significant role in 2021, shaping how businesses across various sectors adapt their business model to the new reality of post-COVID-19 world, right? And we see this playing a major role in 2021. Social political pressure, we call a few points the social wheel of pressure, right? And it sort of show all the areas that we have the very vulnerable underbelly, if I'll use that word, and we've seen it played out lately. I'll just summarize that point on social political on this slide. There's quite a number of dimensions. A number of them, if you look at the diagram I have in front of you, will not change significantly in 2021. Healthcare may improve, right? But all the other critical fundamental issues will not change. Why? Let me take poverty as an example, right? No matter what government does now to continue to address poverty, is that we're going back to where we were in 2019, because the COVID-19 has dropped a lot more people into the poverty bucket, and so it means that then government going to be running against time. So this is going to be a difficult time. Migration, right, will also be an issue. We'll keep losing some of our best brain. And I don't think government has a coordinated approach to deal with some of these structural issues. And we don't see any significant improvement in 2021. We also think political discontent will be further emboldened, and we'll see a lot of this also play out in 2021. Wrapping up on the trends, talking about what we think is critical, the most important pillar to all of this. Consumer have been sort of battered, income disrupted, spending disrupted because of the increase in prices. Remittances have fallen significantly for those dependent on their on their family outside Nigeria, right? Unemployment rate is high, it will continue to be high. The principle around unemployment is that for all the unemployment that happened during this COVID-19, it will take at least 1 year for that to be recovered. So when you layer that on top of the huge unemployment level we have, so we know we have a huge challenge around that. So the consumer is going to be impacted in 2021, and that's why sector like manufacturing and trade will also continue to struggle in 2021. So what I've done is to just talk about all the 10 factors we think will shape 2021. To just wrap up with conclusion, given a short timeline, a point I need to note to all the listeners: never take your eyes off the shocks, right? What can happen that can even disrupt your entire plan? I think that's very, very important. Keep your eyes on the shocks, and there are quite a number of them, and that could disrupt even your entire plan. And when you do your 2021 plan, have this at the back of your mind and have a scenario in which some of this shock, what you call the black swan, play out. Because black swan means is an event that you do not expect expect, but that have significant impact on you. Broadly looking at the numbers, we see three scenarios, right? We see the GDP between 1 to 2.5%, which we'll call a slow recovery. For us, right, we don't expect that the most optimistic the GDP will be actually less than 2%, more like 1.45%. The number of factors, inflation will be further pressure in the year to come. FX will also be pressured, right? We hope that CBN may adjust, but that we cannot control. So 2021 is a year of uncertain recovery. We definitely will have a recovery, but it's going to be very, very modest, right? And as you as planner think about it, you need to be cautious with your plan. Looking at the 10 factors again, the 10 trends, and then using them to dimension the sectors, right? So what we've done is just to analyze each of the sector. You will realize that quite a number of sectors are unattractive, on a broad macro basis. FS will remain broadly attractive. Agriculture will remain attractive. Trade will be challenged. TMT, which is telecom, will remain attractive in 2021. Manufacturing will be tough. Oil and gas will be tough. Hopefully the PIB can be passed, then it sort of change the game. Real estate will be tough. Aviation will be tough, right? That's what we see for 2021. As I wrap up on this note, as you think about 2021, plan for shocks, right? Hedge and diversify. Ensure your business is agile to adapt to changes. Regulatory compliance is critical because regulatory pressure will be a lot. Think in scenarios. Think about a sectoral approach, and as much as possible, scale your business. Thank you very much. I've taken a bit of time more than I was allotted. I hope you enjoyed the presentation.
Thank you very much, Olusegun. So let's choose Q&A. We've not received any questions lately, but I would like to ask one question. So on the SAP, the financial where we have the significant economic presence especially for digital companies, what's been the update in terms of digital tax on digital companies? I know KPMG has been engaging the ministry. So I would like you to just share a brief overview of what the update is on digital tax. You're muted.
Sorry, thanks. Wale is on the call. Wale, I don't know, can you help share some thoughts on that question, if you don't mind?
Okay, all right. Can everyone hear me?
Yes, I can hear you, Wale.
Okay, all right. Well, I mean, the significant economic presence order was issued by the minister in May 2019, with an effective date from the date of commencement of, May 2020, with commencement date from the date of the commencement of the Finance Act. But one of the recommendations we made to the government is that actually it should, the effective date of operation should be from the date the order was published, because otherwise it will have retroactive effect when people didn't know what the compliance requirements were. So since then, few of the digital economy operators, they have registered, and some are taking steps, with a view to comply. But I have to say that the response rate is low in response to the significant economic presence order. And part of it is because there's still a global debate as to how the digital economy should be taxed globally under the OECD inclusive framework. So that's yet to be finalized. A regime was meant to be defined for guidance of various companies with effect from December 2020. But now the deadline has shifted again to 2021. So we don't know where that is going to be resolved. And I believe that it's in the midst of that uncertainty that some of the digital economy operators otherwise affected by the order are still more like adopting a wait and see attitude. But like I said, we've seen a few who are who have registered with the FRS, and some are also taking steps to comply. But we're not seeing a rush in this regard.
Okay, thank you very much, sir. Ade Obatwimbo has a question for Zacchaeus. He said, it's from Cummins, Nigeria. I've been more aggressive. I've seen more aggressive devaluation scenarios from the international markets. One example of which has been Naira going to 550 to $1. What is the underpinning of the 420 you shared?
Thank you for the question, right? The first question you ask yourself is, how do you determine fair valuation of an exchange rate, right? The number of factors you consider. You can decide to use theoretical economic model, right? You can use the dynamics of demand and supply. You can use the margin between the parallel market, and the official market, right? So there are different ways you can think about it, right? So if you look at CBN computation, they even say the Naira is undervalued, right? If you look at RENCAP say we are like 9% overvalued, right? So different people use their different methodology, right, based on their understanding of what they've used in different markets, right? So it's very difficult to determine what the theoretical fair value is, right? But policy authority tends to do things, that sort of reflect their own policy goals and the ability to manage the price stability within the economy, right? So it depends on who you ask, right? It could be 550, it could as well be 350, right? Obviously not, because there are pending demands to be met. So so that's a point of view, I would say, right? But I think what we know is that there is some level of overvaluation of the Naira. At how much will always be a debate, even amongst economists, right? Thank you.
Thank you very much. One question from Jay Lucas. He says, any projections for healthcare? He says he's not sure he spoke more about the sector.
Okay. Thanks, Jay, for the question. Right. So the table did not actually show healthcare, but healthcare is one of those sectors, we call it post-COVID-19 emerging sector. And there are two reasons why. Right. One, policy support for that sector is very, very important, and we see a lot of that going into 2021. That's one. Two, funding, both from a credit perspective and even a long-term investment perspective, is a critical factor that we see being positive in 2021. The third point is consumption, right? So I think everybody has realized, still in developing economy, the state of decay of our healthcare, right? And the consumption, the need for the healthcare will always be there. So from a consumer perspective, it's not a discretionary income. I think it's also, it has significant opportunity from that perspective. So given that, right, health sector is an emerging sector as we typify it, right, and it's attractive sector, even going into 2021. So I will agree with you. I'm sorry we didn't show that in the details, but it's part of our broad analysis of the economic sectors.
Okay. So one more last question from Fumi Ogunlesi of Citibank. So many thanks for the excellent presentation. Can you speak to the relative size of the informal economy and its ability to act as a buffer or shock absorber to poverty levels and corresponding social unrest?
Okay, thanks for the question. People have tend to estimate the informal economy between 50 to 70-75% of the formal economy. But what you need to look is to look at the financial flows, right? Income flow, even to the informal economy. So how does the income hierarchy start, right? And for that informal economy to be an engine, right, of economic growth. So most of those income comes from remittances, right? And people sending money to their folks in Nigeria, and they're using that to drive economic activities, right? money comes from people that have formal employment. The informal economy is part of their longer value chain, right? If you get the concept of value chain, which I know you do, right? So informal economy is very important. It works, right? But it's still dependent, quite a lot on the formal economy, right? As I've just explained. Yeah. So it's an important part of the broader economy, but is it able to absorb shock? I don't think so. And the way you look at it, right? If you look at the people, household that operate in informal economy, right? They are just they are one income. They are one shock away from entering into a huge poverty, right? And why? Because quite a number of them don't have adequate savings to weather, the times of shock, etc. Right? That's why the issue of financial inclusion is also important, because it brings them that financial knowledge that you need to save, for hard times, so that you're able to survive when things like that happen. So there are a number of factors that make the informal economy vulnerable. Some of them which I sort of mentioned. Thank you.
Okay, thank you very much. I think that's all we have. That's all time we have. We're handing over to Margaret Lely, the CEO of the American Business Council, who will do the closing remarks.
Thank you very much, Joseph, and thanks a lot, Shegun, for the wonderful presentation. Thanks to KPMG that's always supported the council for a lot of things, including this kind of expert conversations that would certainly cost a lot if they were having to discuss this with individual organizations. So on behalf of the American Business Council, with due respect to the president here and members of our board who are here, as well as other members of the ABC, would like to thank everyone for making out time. So I know a lot of us can't wait for 2021, and with all these kinds of conversations that we also we need to really get our acts ready to move ahead of the year. So thank you very, very much for attending, and we look forward to seeing you again at our next economic update.
Thank you, everyone. Thank you very much for attending. Bye.
Bye-bye.
Bye.
Bye.